So is the stock market going to crash? There's lots of speculation out there. This is July 15th of 2020. The stock market has been on a surge due to the Federal Reserve's unprecedented quantitative easing, monetary policy. So what is in store for the stock market as we move forward the rest of this year? What is that going to look like? What can you expect? So what the Fed is doing is they are basically bolstering confidence. Number one, they're providing investor confidence. They're providing confidence to the markets, to the economy, and to everybody around the country that they're not going to let the economy fail. They're not going to let the stock market fall and those types of things. So what they can do, what the Fed and the Treasury can do, what the government can do, is they can provide confidence, they can provide liquidity, but they cannot provide solvency. That's to say, they cannot make a bad company good. They cannot make an economy that's not producing income. They cannot make it produce. So you can put liquidity out there so that the credit markets, capital markets continue to function, but you can't make an insolvent company solvent. You can't bring a company that is broken back into correction. So there's a lot of bankrupt companies out there, unfortunately, and a lot of them were on that path before we entered this, and this situation has exacerbated the problem. So they can't fix that. You can't make a retailer that's going out of business that is no longer relevant again just because you're pumping liquidity into the markets so they can borrow money. That's going to cover their overhead. It's going to maybe keep people employed for a little while, but it's not going to fix the fundamental underlying business and all the suppliers, vendors, and everything else that goes along with that to support that business. So eventually that business has to close. It has to go out of business. So what you want to think about investing in the stock market and equities long term is that contemplation right there. There's a lot of companies out there that just aren't going to be around 6 months to a year from now. So there's going to be a fundamental reckoning of what the stock market should represent, which is a capitalization value of the underlying fundamentals of that company. So it's forward looking, and it's usually relative to the valuations of the company. So if companies are broken, if they're not generating income, and companies are closing down the road and we can't fix the unemployment, then the stock market has to correct at some point, because right now it is not relative to where the economy is at the retail level. It's not representative of the economy at the retail level. It is supposed to be forward looking. We still have a long way to go, a long road of recovery ahead of us. So just be careful, be mindful, watch where the Fed is plugging the holes so you know where not to be. Watch where institutional capital is going so you know where to be. Look at the debt that they're buying. That will give you an indication of where you don't want to be. Watch where they're investing in the long term. That'll tell you where you might want to be.